you have done both technical analysis and fundamental analysis. How do you think technical and fundamental can together be used to make a model and using them individually?
Well, there are people at this conference, speakers, who advocate for technicals only. I've worked with many people I respected who were the big believers in turning off the news.
True.
The charts reflect everything you need to know.
Correct.
And there's no reason to be reading the newspaper or performing, building an earnings model or something along these lines. I'm not one of those guys. I believe in what Ralph Acampora calls fusion analysis, which I'm sure he's probably talking about here at today's conference. The reason I feel that is based off of personal experience, honestly. That's how I first discovered the value of fundamental analysis. It was as a technical analyst, I had discovered situations where the technicals indicated that, let's just say, all signs were go, green light, but the stock ended up underperforming or not performing at all the way that you anticipated because of fundamental reasons.
True.
Examples would be the company had a capital structure that had convertible securities that because of the way that those were underwritten prevented the stock from appreciating. And the technical trader wouldn't know that. You have to sort of dig into the company financials. And if you're investing in the United States, we have the Securities Exchange Commission requires that you have all these documents you have to put out.
Right.
And to analyze those gives you a bit of a leg up, I think. It's a little bit of a safety net in terms of technical trading. Now that's at a minimum level. If you wanted to also incorporate, there's the argument that fundamentals are good for long-term investing, whereas short-term is better technical. I think that that's not necessarily true. I think fundamental could be used in both short and long-term, as well as technical, short and long-term. The tools that in both camps are applicable in any time frame. For example, if you'd identified using fundamental analysis like a discounted cash flow analysis that a stock's intrinsic value is much higher, well, you may be able to realize that over a week, right? Or 3 years. Who knows? And of course, we all know that the fundamental crowd doesn't like to put any kind of time frame, especially value investors don't put any time frames on their investments, which is probably intentional. But nevertheless, one could use just the fundamental model in order to realize value. But if you combine that with technical and timing the market, how much more powerful are you? You're infinitely more powerful in terms of portfolio management.